Wall Street just walked onto Coinbase's turf. On May 6th, Morgan Stanley switched on direct crypto trading inside E-Trade Bitcoin, Ether, and Solana at a flat 0.5% fee. That's below Coinbase, below Schwab's 0.75%, and backed by 8.6 million brokerage accounts and 16,000 financial advisors sitting on $9.3 trillion in client assets. Look, this isn't a side experiment. This is a full structural play, and it changes the math for every crypto exchange in the country. So to begin with, Morgan Stanley just launched a spot crypto trading pilot on E-Trade, reported by CoinDesk. The fee is 50 basis points, that is 0.5% per transaction, on Bitcoin, Ether, and Solana. That undercuts Coinbase, Robinhood, and Charles Schwab, which charges 75 basis points. All 8.6 million E-Trade clients are set to get access before end of 2026. Looking at the chart, Morgan Stanley stock held firm around the May 6th announcement date, which tells you the market had already priced in some brokerage expansion moves. I mean, the price did not spike dramatically, but it did not sell off either. That kind of flat to mild reaction on a pilot launch often means institutional investors are waiting to see real revenue contribution before they reprice the stock. Zooming out, this is part of a much bigger shift where traditional brokerages are absorbing crypto rather than fighting it. When a firm with 8.6 million retail accounts enters at 50 basis points, it pressures every other platform to justify their own fee structures. The race to zero on brokerage commissions took years. Crypto fees could compress just as fast. So here is the debate. Morgan Stanley is offering 50 basis points right now, but teaser rates in financial services have a long history of creeping upward once users are locked in. Is this genuinely the cheapest on-ramp Wall Street has ever offered retail crypto traders? Or is 0.5% just the entry price before the real fees kick in? Drop your take below. Looking at the chart, BTC is sitting near $82,000, holding a level that has acted as both support and resistance across the last several weeks. Volume has been measured, not panicked. And honestly, that kind of compressed price action right before a fresh demand channel opens is exactly the setup institutions talk about when they say retail has not arrived yet. When E-Trade's full rollout hits and those 8.6 million clients start allocating, which asset captures the most upside? BTC gets the name recognition. ETH gets the ecosystem argument. Sol gets the growth narrative. Which one wins the most new money? Also to understand, when Morgan Stanley launched crypto trading through E-Trade, most headlines focused on the 0.5% fee. But the more consequential detail is who actually holds the keys. Custody, liquidity, and settlement all run through Zerohash, a Chicago-based infrastructure firm in which Morgan Stanley already holds an equity stake. Looking at the chart, Ether is the asset most directly sensitive to institutional custody confidence, and that shows here. Price has been consolidating in a tight range, with volume thinning into resistance. When TradFi custody rails improve, Ether historically catches a bid faster than Bitcoin. Right now, the setup looks coiled, not broken. Morgan Stanley is routing client crypto through a third-party infrastructure firm it partially owns. TradFi clients trust the Morgan Stanley name, but the key management risk lives somewhere else entirely. Does that gap between brand and backend create a risk that most E-Trade users simply won't see coming? What Morgan Stanley is assembling is a closed-loop wealth management system for digital assets. Custody via a trust charter, spot trading through E-Trade, ETF exposure under its own brand, and tokenized equities eventually living on the same rails. That is not a crypto product. That is a crypto platform targeting trillions in managed wealth. If Morgan Stanley completes this stack, wallets, custody, ETFs, spot trading, and tokenized stocks, does that make it the first real TradFi crypto super app? And if it does, what happens to Coinbase, Kraken, and every pure play exchange competing for the same wealthy client? That's pretty much of analysis and knowledge sharing for today. If this video gave you something to think about, hit subscribe. We break down moves like this every week without the hype. See you next time.